Good afternoon, everyone. Welcome to today's Caseware webinar. Today we're looking at the disclosure of brought forward figures. This is an introductory level session, as you can see there. This follows on quite neatly from our our rounding webinar that we recently held. We did talk about brought forward figures there and how to clear differences and that sort of thing. So we're going to be looking at that in more detail today. If we jump to the next slide, you'll see, my name is Tom Jeffrey. I'm one of the education and media technicians at Caseware UK. I'm going to be making sure that the webinar runs smoothly today and also monitoring your questions and that kind of thing. The content is going to be lovingly brought to you by Anthony Launchbury, our senior education and media consultant. So Tony will take you through the agenda and the content shortly. As you can see here, we've got the housekeeping. So as usual, we have the Q&A option on the toolbar there. You can use that to submit your questions. We will we'll do our best to answer them live on the session. Of course, we have allotted some time for a Q&A later on, but if we don't get back to you live, then we'll do so after the session. We'll also put any questions into a Q&A document that will accompany the recording of the webinar, which will be on the help site, which we'll signpost a bit later on, and also we'll put that on our YouTube channel. So that's the housekeeping out of the way. I'll pass you over to Tony and we'll have a look at the agenda. Hi, Tony.
Hi there, Tom. How you doing? You all right, mate? Good. Right, first off, thanks everyone for joining today. I just want to go over a few points there that Tom raised as well. The questions, it's really up to you to throw some questions our way, make our lives difficult, okay? It's your opportunity to ask what you like, and we'll try and cover that as best we can within the Q&A session, as Tom said in the follow-up. Now, what we're going to be covering today, as per the agenda on the website, we'll be looking at brought forward balances, thankfully. And then really, when we get to this bit, I just want to point through a few areas for you to consider. Now, what you're going to get from that is a bit of a theme, really, and the reasoning why you're going to need to look at brought forward figures and what kind of areas you're going to get from, obviously, setting up accounts within Caseware. Through that, we'll go through some examples, how to clear these down, and just give you what I would suggest is a recommended best practice to getting up and getting on with the accounts as quickly as you can do. We understand that setting up the opening balances can be challenging sometimes. We also understand that you don't always get the data that you need to be able to do that from the clients. So we'll talk about that as we go through. Okay. All right. So the first set then, brought forward figures, areas to consider. Now, this is really what we're going to focus on today. Okay. So we're going to really look at fixed assets. Now, it doesn't really matter if we talk about fixed asset investments or tangible fixed assets or intangible, because there always seems to be the same issues. It's always down to a level of detail in the mapping or potentially an error on the client's record. So that's going to be the main focus when we look at fixed assets. Provisions, deferred tax side. Well, this again is an area where Caseware needs a little bit of detail for it to be able to populate the balances the way you need them to be shown on the face of the account. So again, we're not going to go into huge amounts of detail here because, as Tom mentioned, it's an introductory webinar, but what we will be doing is focusing on the basics, how to set these up, what you need to look out for, and obviously the big one here, when it can go wrong and what do you do about it. So the final one there is the statement of change of equity. I might jump on that a little bit quicker, to be honest, because it's a nice one to touch on, and it's an area that will probably affect most of you. It's quite a complex table. I know on the face of it, obviously we've got the prior year movements, the current year movements, and we get those 2 pages effectively, don't we? It can be very detailed depending on how many reserves we've got in there and so on. Behind that, though, the tables that Caseware put together are a lot more complicated. So I might give you a little sneak into those as well, just so you can get some understanding of the nature of the table and why you may need to deal with that slightly differently than other areas of the accounts. Okay. It's actually linking quite well to when we look at the fixed assets, tangible fixed assets note, because they're quite similarly structured in the level of detail in the background. So again, that might help you understand how it works and so on. All right. So first up then, detail from clients' ledgers. This is generally an area that you will need to consider before you start setting up your files, or in the process of when you are setting up the file. So I'll give you a second just to go through and read that on the screen. Okay, I'm sure you've hopefully all read that by now. Now, the big bit here really is the data we get and the data we import into Caseware. Okay, it's an area that you should really try and consider a little bit early on. And the example there on the right hand side of the screen is looking at Sage 950. And as you'd imagine, this pops up quite often on our support calls when our support team are going through screen shares and bits and pieces. And it's the level of detail there, really. When we work with Sage 950 and other applications like that, they're geared up to do a really good job at bookkeeping and preparing those records, aren't they? And they do it wonderfully. The problem is they're not designed for financial statements. So there's a level of detail in there that we potentially are not going to get. So when we look at things like the cost there for office equipment, well, we need to have an understanding of impairments. We need to have an understanding of disposals, additions, and we need that data to be driven into the financial statements to populate, obviously, our notes correctly. And this is an area with brought forward balances that comes up time and time and again, whether it's new users of the software or new firms taking up the software, it always pops up. And it's the area that we really try to focus on first to get these opening balances working the way we need them to. So what we're going to do is I've got some files today that we're going to look at and we're going to work through. Okay, now those files we're going to look at, I've got one which is completed. We did the rehearsal the other day and we realized that I spoke for far too long and well, we overrun, didn't we? So hopefully today we should run to schedule, giving you enough time for Q&As. Okay, so this is the first bit we're going to start. So give me a second just to go through and open up my Caseware file. As I said, I've got a couple today and we're going to be using both of them just to make sure that we have what we need. So hopefully now you should all see Caseware working papers. No, well, you would have done, but there we go. Let's cancel out the slides and I'll come back into those later on. All right, so hopefully now you can all see working papers on your screen. This is, again, the same Sage 950 TB. We've got account codes there for freehold property. We've got plant machinery, cost brought forward, depreciation brought forward. So we've got a little bit of detail we're going to work on today. Okay, we're not going to cover all aspects of the TB because, as I said, I overrun on the rehearsal, so I need to keep within the time restraints. But we will definitely be focusing on a couple of these areas. Okay. Now, to really get a look at this and see what the effects of this TB are, then we can go into the accounts. So documents, accounts, and as you can see, it opens up rather quickly, and it opens up rather quickly because I already had it open. So there's no tricks, or I haven't got any different versions to you, or I already had that open at the bottom of the screen. Now, when you're in here, the first thing you guys are going to see at the top is be that red banner, isn't it? And this, as you could see, if any of you joined the rounding webinar, it could be down to mapping errors. It could be down to areas that require additional level of detail, like taxation note or dividends, or it could just be because we made a mistake on the mapping. So these are the ones here. These are all down to, well, there's small rounding differences where we've got the statement of financial position. I'm not going to be too fussed with this minus £1 a day, just because there's a nice easy rounding function that you can use within the statements to go through and clear those off rather quickly. So that's that rounding button there where you can just go through and apply it. So that's not going to be my focus. I will be focusing on that small difference though that you saw on the statements of changes of equity, because this here, you don't have that option to go down to this note and apply a rounding. So I can't go to one of these rows here and go, okay, there's the profit and loss account. I need to apply around 1 unit of rounding there. The button's available, but when you click on it, you get this nan comment in the difference box. So it doesn't really help you clear it, does it? So we need to delve into this today. And I just want to point out why you're getting these differences. So the big one here then is if we go down to the prior year, the current year statement there, we've got a balance as at of 1104,401. And then as you go up here, you've got a balance of 1104,402. So you can see that's where that difference is, isn't it? So it's between the at 1st of January 2021 within this table, and then obviously we've got the closing balance at the 31st of December. And obviously we need those to tally up, don't we? We need them to agree. They can't be different from each other. So what I'll do is I'll explain to you why we've got that difference, and obviously give you my best recommendation of clearing it down. There's a couple of routes you can take, but there's one really quick and easy one, and one which takes a little bit more thought. So I'll leave that up to you guys to decide what's best for you and your colleagues. And obviously you can implement that within your own practices and so on. The area that I always start off with, though, is the biggest differences. And obvious reasons, really, it makes more impact, doesn't it? And there's obviously more of an issue here than there is here. This issue on the SOCI is, well, it's a small rounding difference, and we just need to know how to clear it and understand what's driving it. Whereas this one here is, well, it's 123,000, and that's a little bit more of a problem. So let's navigate up to the statement of financial position, or the balance sheet, however we want to call it. And we can see that the issue is right here. And it's our net assets does not agree to our reserves, or equity figure of 1,204,685. So why? Well, this down here is really easy to reconcile, isn't it? We got the profit and loss reconciliation from last year. We'd understand what the issue was there pretty quickly if there's a difference in the profit and loss reserves or the revaluation reserves and the share capital. Well, I know we get movements there, but they're quite static in comparison to other elements within the balance sheet. So it's not going to really be down here generally where we have the issue, is it? It's going to be above. So when we're looking at our current assets, current liabilities, and so on. So this is where I would always start. Now, see, if we were moving from another software to Caseware, or we won a client that from another practice and then we're taking it, we've got the prior year account. So see, I'm assuming that the first thing you would all do would just be to look through the prior year statement and see what the difference is. And that would flag up what the problem is here very quickly, because you'll be able to tell. Now, on here, and for today's example, I don't have another set of accounts for the prior year, so we've got nothing to compare this to. So what's the best route to find out what the problem is within the current assets, the fixed assets, and so on? For the ones of you that were on the say the rounding webinars previously, you had maybe bumped into a document called the TB diagnostics document. Okay, it's a document that not many people knows there, or they don't find it, generally because it's not available to click on here, so they don't look for it. If I take you back into Caseware working papers, you can all access a TB diagnostics document by going to your digital dashboard. So mine's open down the bottom here, but if you had closed it because you don't generally use it, then you can reactivate that by going to the home button. Okay, so by selecting that home button here, you'll be able to go back to the dashboard, and then from there, you can go to other docs and TB diagnostics. Now, this TB diagnostics document is a case view document, so it looks like I'm going back into the accounts, but in a second or two, you should see a different screen. And this, to me, when I'm setting up accounts in Caseware I'm working on client implementations, is really blooming useful. It points out where I've got differences between closing balances and opening balances, and it doesn't tell me exactly what's wrong, but it tells me where to look. And that's half the battle, because when you're looking through the whole balance sheet, especially on larger sets of accounts, it can take you a little bit of a time just to obviously find out what's wrong and so on. So this, to me, is really useful. It's not very pretty, but it's not meant to be. It does the job. So the first thing I'd always look at is, like, I wouldn't worry about the depreciation codes up here for the start, okay? These are all depreciation codes, and we've got a problem here, haven't we? Definitely. We've got a difference between what the balance sheet codes are saying and what the P&L is saying. So our P&L is saying one and our balance sheets are saying the other. So just to show you that, I can go to the trial balance, I can go down to the bottom of my TB, and there's those two depreciation codes. Obviously, we can work that out, that is that 8,000 that you just saw a second ago on that TB diagnostics document over here. So we know what the difference is then, is our P&L is saying we've got 8,000 of depreciation, but you can't see that 8,000 anywhere on the balance sheet. Okay, so that's a problem, isn't it? So it should definitely be, obviously, those should be definitely balancing off. So that's something we need to have a look at. Now, underneath this, it starts looking at the fixed assets, and it tells me a few things quite quickly and easily that where we've got problems. So my freehold depreciation is, I've got £5,221 out, so, or euros, or whatever currency we're working with. If I hover over that figure, it gives me a little tooltip. So there is a difference between the figures posted to the current year code A0101 question mark means any variation. Okay, so it doesn't matter if that's 01, 02, 03 or 99, or if it had AB there, it makes no difference. So that is our focus really. So anything that starts off with A0101 and ends in 51. And then if you look at your codes below, prior year one map codes A0101 question mark 5 asterisks. The asterisk is another wild card. Okay, so it means any variation from that point on. So it could be 51, 52, 53, but it can only go up to 59. Okay, also it could be 50A or 50C depending on what mapping structure you're working with. So if you're not just an accounts advanced user, if you use other applications within Caseware, then maybe that may be slightly different. Under here, we've got the same issues looking for plant machinery and cost brought forward, and also depreciation. So what I'm going to do is I'm going to start off with these two, okay? And then I'm going to go to freehold property later, and I'll show you what the difference is. Now, some of you would already guess what the difference is because I've kind of set it up. And it's that level of detail on our trial balance, okay? So for Caseware to go through and populate, let me get into the right file, the accounts and the tangible fixed assets note correctly, what it needs is that level of detail split in between depreciation charges and so if you were to look at your tangible fixed asset note, you may not get any real, we do get one is 123,000. But you can see here, we've got a cost brought forwards of 159,000. So that's exactly the same as the year end. So we haven't got any detail. There's no movements in here, is there? So what's going on? So that's when you all need to go back to your trial balance and we need to have a look at these account codes. Now, for me personally, what I always would do is I'd sort it by map number. And the reason I'd sort it by map number is because that's what I'm more familiar with. If you're more familiar with the client codes, then obviously sort by that. For now, though, what I'd say is, look, we've got these two accounts here for plant machinery cost brought forwards. And this is where we need to start looking at building some more detail in. Okay, so to help me out with this, I've got some notes on the other screen. So what you'll see as I go through is I might be looking over here. So just bear with me as I check what those details are. So first thing is then we need to look about what's in here, don't we? So we've gone from a balance of 2590 970. That's the same in the prior year too. And then we get this massive leap to 157,000 in the current year. So your step then is really to build that detail in, which is that movement between this 25,970. Now, it could be a bit more complicated than just having an addition, couldn't it? Which obviously I understand there could be disposals in there, impairments and so on. So what I'm going to take is a very simplistic approach and assume it's additions, okay, today. However, there could be more detail we need to build in your files, for example. Now, at this stage here, what I would do is I would create a new account code. So I'd go to new. First of all, actually, I will cheat a little bit because my typing is terrible. I will copy plant machinery so we get the right terminology be pulled through. So let's go through and there we go. Let's highlight that and copy it. By the way, you can use Control-C, Control-V for shortcuts in here. So if you like keyboard shortcuts, use those to get the text in there. So I'm just going to call this account code 0021. Okay. And we're going to have a plant machinery additions. Now, at this stage here, you can then go through and find the map number. So you could use the drop down. Easy enough to go through there, isn't it? And just get the right one. So we want A01. And in this case, we want a 02 on the end. 02 denotes that is a addition. So we set this account up. Now, at this stage here, then I've also got this issue, haven't I? I've got 22,183. I've got 19,22. So every single year, there's a jump, and obviously that makes sense. Every single year we have a depreciation charge. So what we need as well is we need a depreciation charge. So again, I'm being lazy, copy and pasting. And then I'm going to select new. And at this point, I'm going to call this 0026. And then we'll say depreciation charge. We're going to say this is on owned assets. Okay, so this will not be triggering any rights of use notes at all. The map number for charge in the year is A01.0400, and for that one, what we need to do is have a 52 on the end. Okay, so if you do know it, type it in. To be honest with you, it's probably quicker than finding your way through the map codes if you know what it is. That's 53, by the way, and 53 would be driving your rights of use assets disclosure within the tangible fixed asset note. As I said, though, I don't want that, so I'm going to leave it set up as that. So this stage then, how do we update these? So the first thing is here, what we really need to do is we need to update the prior year. We'll start with prior year to get that data in. You've got a couple of methods for doing this. Choose whichever one you prefer. I would go in this case for the quicker and easy option, which the quick and easy option is just a double click on the prior year 2 column. Once I double click on the prior year 2 column, you'll see a new screen pops up. There's my prior 2 balance. And obviously I can jump back to the working TB nice and easily. But this will now then give me the detail I need to be able to go through, or the area I need to go through and manually enter those movements. So what I need to change then is I need to change this figure here, don't I? So that there, we're going to get rid of the we'll keep the 2597. That's fine, sorry. It's not the cost we need to update within the prior year 2. It's actually just the depreciation. So this depreciation then, if you were looking at it, it wouldn't just be a brought forward depreciation in prior to, let's just, again, first year. But in this case, we're going to assume it's not the first year. There was data prior to that, maybe in 2019, 2018, and so on. So what I need to do then is update this figure. So that figure then would have a depreciation charge in it. Okay. If I go back to my trial balance here, and I have a look at the prior year 1, so double click there, that would be the same job. So I need to look at the costs. So that's fine. We're saying there's no additions in the prior year, so we'll leave that as it is. And then down here, we've got the depreciation brought forward. Well, the depreciation brought forward here and here obviously are slightly different. So again, let me just go through and get my workings up on the screen so I can see exactly what that is. There we go. So the 2961. Let's just open that up there. Perfect. All right, so what we need to do in here then is we need to obviously post that movement, don't we? So between this 22183 and this figure over here. So there are depreciation brought forward. Okay, so on this case, then what we'll do is we look at these depreciations brought forwards, and we just need to make sure we're posting in that movement. Okay, so at this point then, just to double check before I start moving anything around, we want to go into prior periods. In this case, then what we want to do is remove this, don't we? And we want to put that depreciation value in. So that'll be our 2961. Now, at this stage here, if you haven't got a calculator or notes on your screen, we've got our difference down the bottom of we, so the 19222. So then I know the balancing figure there has to be that minus 19222. And once I enter that in, you'll see that it's zeroed off down here. So that would be my prior year. So I can go into this screen here and easily go through and amend these figures to get the right level of detail in. I still need to look at the current year though, don't I? Because at this point here, I've gone 19222. That was my closing balance. At this point here, I also need to go through and update this, don't I? So I need to make sure we put in that prior year depreciation. So I can double click in the prior year 2 again. I'm just going to do exactly the same here. I'm going to enter in that the depreciation charge if you have it. If you don't, obviously, for this example, it doesn't really matter because we're only looking at the comparatives for current year and prior year within our financial statements. So I'm going to leave this one alone just right now, and we'll focus on the current year balance. So the current year balance, then we've got the 25,144. So this one here, you can't just click within this cell and paste this in. Okay, because this isn't going to be overtyped. So the other way you can amend the figures is by posting adjusting journals. So at that stage, then what I can do is I can go to my adjusting journal entries, and then from my adjusting journal entries here, I can go through and select my, there we go, my journal. So at this stage, then you just want to go through and create a new journal and put the description in. Again, I've got a few examples over here, so I'm just going to copy and paste it over so we've got the right detail and agree. So current year depreciation charge. And that's where you're going to go through and enter that detail. At this point, then, what we need to do is we would need to remove the balance then from the brought forwards and assign that to the right account code. So let's start off with our depreciation. So there's my plant machinery depreciation brought forward. So account 0025. At that stage, then we want a figure in there. We're going to assume again it is my 2961. So 2961. Again, I've got workings on the other screen if you're wondering where I'm getting that figure from. And then at this stage here, I just need to go through and allocate that downside to the credit balance to the depreciation charge from the year. Now, you could have done this for prior year 1 figures as well. If I wanted to, what I could have done is I could have created a new journal and I could have just changed this date. So rather than being November 2022, I could have changed that to November 2021. That would have put it as a prior year journal, and that would have had the same impact as me over typing the figures as you saw me within the prior year column. Back in practice, I would have prepared a journal, to be quite honest, just because I was in the habit of it. It was easier for people reviewing. They could see exactly what the adjustments were. But feel free to use either method. They get the same results on the face of the accounts. You're probably more concerned about the current year journals. However, if you want that detail for prior year as well, that's no issue for you going through and posting this journal. Okay, I'm going to delete this one though, because I don't want journal 2 just yet. I'm going to go back to the TB. Now we've got these figures in then, so we can go back and have a quick look at that diagnostics document and see what's happening there. What we should be seeing is that 8,000 difference is now reduced, and it's now 5221. So we know what that is then. We know that's the freehold property depreciation. So this time then it's just a case that you need to reperform that same setup that I applied to the prior year and the current year for your freehold property depreciation charge. Okay. Now, what I'm going to focus on first, though, is this 132,000, because now it's quite clear I've got a difference between my prior year closing balance and my opening balance of 132,000. So that's the same kind of job. We need to go back into our file. And again, we've already set the account up, so we're good to go here. There wasn't any movements in the prior years, so I'm assuming there's no additions and disposals there. However, there could be, couldn't there? So it's something for you to think about when you're looking at your own figures. However, for the time being, I'm going to look at this, just adding that movement in. So moving 132,000 from here to there. So back into my adjusting journals, create a new journal. At this point, I want to change it. Again, I need to change the other journal as well, don't I, to reclassifying journal. And this is going to be my additions plant and machinery. Oh, and machinery. Get it in there right this time. All right, so at this stage then, all I want to do is click on my plant machinery cost brought forward, select the account. Again, for the purists out there, you're probably not happy that I'm doing the credit first, but me, no effects, no difference. But all I'm doing here is I'm going to move it out that cost brought forwards, and then I'm going to enter my account, which is 0021, which I set up earlier, and I'm going to make sure we post that 132,000 from there. Okay. Once I do that and I go back into the accounts, you can see, or in the diag, you can see that's removed. So I'm not going to go spend time doing the rest of those with you because you can get the idea of what the next step is, which is the depreciation for freehold property, which is following exactly the same steps. Create yourself an account. Once you create the account, then we just need to go through and post those adjustments. Okay. And again, you've got those two routes, haven't you? So you can go either by going to your trial balance, double clicking in the prior year, or by going to the adjusting journal entry screen. Again, choose whatever is your preference and obviously apply that within the practice you're at. Now, the other areas on here, we've got let me go back into the accounts here. We've got this, still going to have this difference of 5221. So again, forgive me, because that will still be on the accounts. However, when we go back in here, we've still got these other differences that we need to have a look at. So other differences here will be my statements to change your equity. So I did say I wanted to jump onto that one next. This one here is all down to decimal numbers, okay? The way these tables work and the way it groups data together, it could group 4 or 5 lines together and it would round that balance, or it could just round a single line, depending on where it is within a table. And that's generally the reason why we get these differences of small differences between the closing balances and the brought forward balances. Now, there's 2 ways you can clear this. The first way, and the more challenging or the more time-consuming way, is to prepare a journal and prepare a journal for 40p, post it against the profit and loss reserves, and then obviously post that to a rounding account so it doesn't affect the reserves, so somewhere in the balance sheet. The other option you've got, or 2 other options you've got really, is first of all, don't import data with decimals. That's one option. Some of you might not like that though, because you love your lead sheets agreeing to the pence, and I'd agree with you. So you have got one other option from a software perspective that will make it easy for you, and that is by going over to here. So this is to your settings button within your trial balance. Okay, your settings button here, once you click on it, will allow you to select whether you want to round the balance sheet, income statement, and so on. So what you can do there is you can select a random account if you wanted to. You don't necessarily have to, though. What you could do and just apply automatic case view rounding, which is this: select ones, select ones. Sorry, feeling like I might sneeze in a second, so if I do apologize. But once you do here, once you press OK, what that will do now is these decimals will no longer get driven onto the face of the accounts. So when you go back to the accounts, over here, you're going to see that difference. Then we've got 1104402. Well, it's just execute a script. And if I scroll down now, we've got 1104402. So it removes that issue for us, and it does it really painlessly. Where we don't disclose decimal numbers on the face of the accounts, although there is an option on here to do so within the toolbar up here, there is no need to go through and pull those decimal numbers into the financial statements. And that's going to save you a load of headaches with those small rounding differences. You're not going to get rid of them all because of the way Caseware sets the tables up, but definitely for the statements to change your equity for tangible fixed assets, that's going to be a really useful option for you to get rid of decimal numbers quickly. Okay. Now, I have got another file as well. So let's get that one back over here. So this is not that one. There we go. This is a completed file that we go through and got set up earlier. You can see the additional sections in here for the freehold property. You can see that adjustment for that 5221 that I posted, and that will remove those issues that we had. Now, I know we're running close to time, and I said I already overran in the rehearsal, so sticking true to form. I just want to go down quickly and point out to taxation quickly for you. Taxation is going to be exactly the same issue. Okay, so when we're looking at deferred tax and we're looking at deferred tax movements, these also have that same problem with that level of detail. What often happens when you get information from the client's records, it just has one row for deferred tax. It doesn't go through and explain what these movements are between the years. And that's what causes the issue on the deferred tax movements, okay? So it's the same problem we've got with the fixed assets. It's just that extra layer of detail we need to be driven into the financial statements, okay? All right, so I'm really sorry, but I've overrun again. We still will open up to any questions that we've got. So let me go through and ask Tom to rejoin us and just see if we've got any questions that have been raised during the session.
Thanks, Tony. Yes, so we are overrunning at this point, but I am going to fire a quick question at you, which has come in. What does the audit trail look like for the adjustments made direct to the TB? For example, can you see as an adjustment entry?
Ooh, there we go, just unmute myself. No, you can't. So if you go through and you use this prior option I showed you, so if you double click in here, okay, and you amend these, they're within the software, there's an audit trail, but not for what you'll be able to visually see. Okay. So this is why I would suggest, if that's going to be important to you, especially for prior year figures, that you use the adjusting entries option, because at least this way we've got a record of what that adjustment was. You can go to documents. If you had your lead schedules in, then we'd have a lead schedule there, wouldn't we, showing all the adjustments, and we could set that up particularly to look at prior year adjustments. As I said, if I was back in practice, that would be my preference as well, to post the adjustment, because you get a nice lead sheet splitting out everything that you've posted. And for you reviewing, it's a lot simpler, isn't it? So no, you wouldn't get an audit trail for manually adjusting the prior years. A good question.
But as you said, you could use the option in the settings to automatically round your TB on the face of the accounts, but it wouldn't affect your lead schedules, so you'd still be able to view your pence there. Absolutely,
yeah. That's the reason I really like it. I was drilled into reconciliations on bank recs early stages, and decimals I wouldn't get away with not disclosing it on reconciliations. So if they're on my reconciliations, they've been on my lead sheets too. So I quite like this option because it saves me problems on the accounts, but it gets me my lead sheets the way I want them set up.
Hey, thanks, Tony. Yeah, I think we're going to go through the wrap up now, but you can continue to submit your questions. So you've still got that Q&A option there. Let us know if you need us to clarify anything with you, and we will get back to you. We'll email you after the session, but we'll also include your questions on the document that we'll put on the help site. So you can see here we've got our site for signing up to all of our future webinars, as you have done for today. So caseware.co.uk/events. you'll see the agendas there, and you can register to attend. Don't forget you can register to attend even if you don't think you're going to be able to make it, because what will happen then is you'll be notified directly of any follow-up material and the recording once it is available. So if we jump to the next slide, we can see here, I think the just kicks in after a couple of seconds. This is just showing you a quick overview of our YouTube channel. So a quick plug for that. So Client Services Caseware UK. If you subscribe and set your notifications, we'll let you know when new videos are available, including recordings of webinars. LinkedIn, again, Client Services. That's just to be kept up to date with any upcoming sessions and any other news that is happening within the business. And on the next slide, I can't remember what is on the next slide, so it's going to be a surprise to me as well. It's yes, help site. So it's not the knowledge base anymore. Recently moved over to help.caseware.co.uk. Don't worry, all of your old knowledge base links will redirect you to a new article if there is one available. And you don't have to log in for that, so you don't need to sign up to the help site as you did with the knowledge base, unless you want to access things like downloads, and you can request access for those sorts of things. But just for our material and for our articles and webinar recordings and that sort of thing, you can just go to help.caseware.co.uk and start searching immediately. So I believe that's the last slide. So thank you everyone for joining us today. We hope you enjoyed the webinar and found it useful. Keep an eye out for the recording. Take care, and we'll see you on the next session.